What is going on, investors? Hope you guys are doing well out there. That's right. It's time to celebrate because it's Friday. NVIDIA reported their earnings, and it is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. As we said, NVIDIA reported their earnings, and there's some cool news to go through, so we better kick things off like we always do. Meta Platforms. So the week at 473 and some change. The social media giant continues to chug higher, up over 2% to finish the week at 484. The United States House of Representatives, before they went on their little 2-week vacation, set up a task force to manage AI. Now, believe it or not, I actually read through this. It was led by House Speaker Mike Johnson and Hakeem Jeffries. A task force isn't going to write any bills. It's not going to create any hard legislation. But I actually didn't mind a lot of the language that was in there. They used words like guardrails and safeguards and things like that. But for the most part, they weren't really looking to do anything drastic. And that's kind of been my stance since AI started, is in an election year and in a House of Representatives and a Congress that really hasn't done a whole lot over the past couple of years, I didn't expect them to pass an AI bill. Reddit is going public here relatively soon. I think they're going to go public on the New York Stock Exchange, and they're going to sell about 75,000 shares to loyal users. So I don't know what it takes to be a loyal user of Reddit. My guess is you're going to have to be on there for many, many years, and maybe there's a rating system on there. I don't know. It's only a site that I've casually kind of looked at. But if that's you, then I would see if you can maybe potentially get shares in the IPO of Reddit. Moving on to Apple, start of the week at 181 and some change, basically flat, up nearly 1%. Finished the week at $182. Apple is testing a generative AI tool for technical support. It seems to me like Apple is testing some of this stuff internally. I think we looked at something a week or so ago, a press release coming out of Apple where they had another tool as it related to coding on Xcode. They were testing that internally as well. And so it looks like to me Apple's got some AI stuff. I know that they have their Worldwide Developer Conference. That's in maybe a month or two. It seems like that's early spring. And so maybe that, like last year was kind of all about that Vision Pro announcement. Maybe this year we get some AI announcements out of Apple. Now, the company's number one product, the iPhone, topped the U.S. smartphone sales. Despite a January slump, you had sales in the month down 10% year over year. And the peak of smartphone sales was back in 2017. And the figures for Apple are nearly half the volume. Tell you what, if you get some kind of reason for people to buy more iPhones, well, this company is probably in for a monster rally. I just don't see it right now. I have a phone that's a couple years old. I don't think I'll buy the iPhone that comes out this year. I know there's a lot of subsidies from the carriers, but it's one of those devices that you just don't have to upgrade very often these days. Now, Apple launches a new free sports app for its iPhone. Thought this was kind of cool. I haven't downloaded yet, but it does have some interesting things in there. Obviously, the sports and the scores and the news and things like that. But what they're going to likely have in there are sports betting odds. So it makes you wonder, could Apple get in the sports betting business game? Might not be on brand for Apple, but they certainly could partner with a DraftKings or a FanDuel or one of these other sites and use it as a way to earn some money off of this new free sports app. The other thing that they could get, obviously they're into, is they have the rights to the MLS. They can integrate that in there. And I just think over the long term, we're probably looking over the next 10 to 15 years, I think Apple, Google, and Amazon end up with all of the sports rights, since we'll talk about Warner Brothers and some of these other companies from a streaming perspective. They just are running out of money. Now, Apple said to change its audio leadership, and you're seeing a lot of changes over at Apple. A lot of the design chiefs have left. They've actually joined Johnny Ive. Johnny Ive has his own design studio out here in San Francisco. He's taken a lot of people. I think he's working closely with OpenAI on some kind of upcoming device as well. So a lot of Apple hardware designers have actually left the company, and now you're having changes kind of in the audio, the headphone type units, and they also have those HomePods, which are actually pretty nice product. What will be interesting with Apple. And look, every company goes through transition, especially a company that's been around as long as Apple. And as you work there, you make a lot of money, and so you can leave after a while. What will be interesting is if the new people come in and actually are allowed to do something, that they actually can come out with a new product, refresh products, radically change the design or something. And maybe the Vision Pro is kind of a sign of that. The Vision Pro to me doesn't seem very Apple-like from just a product standpoint. It definitely stands out, and it's kind of an outlier in terms of their product line. And maybe it is a sign of things to come for Apple. And I think for a company like this, that could reinvigorate interest in the shares of Apple. Moving on to Amazon, started the week at 167 and some change. Wow, Amazon up over 4.6% to finish the week close to $175 per share. That's after Amazon, and I wasn't surprised by Amazon. I was actually surprised by Uber a little bit. They are both headed to the Dow Jones Industrial Average, and Amazon should have a pretty decent weighting in there because the Dow Jones is actually price weighted versus kind of a market cap thing, and Amazon being $175, actually a pretty expensive stock from a dollar perspective. Uber sitting at 78. Being added to the Dow Jones index is more of a vanity thing than it really benefits you as an investor, but certainly didn't hurt shares of Amazon this week. Jeff Bezos doesn't care as he offloaded another big stake in his Amazon shares. He just capped off a $50 million sales, about $8.6 billion worth of shares. And last time he did this marked a near top in Amazon and the markets in general. We'll see if his timing is impeccable again. Amazon reportedly preparing to retire an ad-supported service called Freevee, which is one of these FAST, which is free ad-supported television. However, Amazon reported or responded to the report in Variety saying there is no changes to Freevee and they plan to keep it around. Senator Elizabeth Warren wants regulators to review Walmart's planned Vizio TV deal. Now, Vizio is a $2.3 billion television maker that Walmart agreed to buy this week. Now, some of you guys let me know down in the comment that you don't want to hear politics. Guys, this is not about politics, okay? You could have Senator Mitch McConnell up here. You could have Senator Grassley up here. You could have every Republican senator wants regulators to look at Walmart's planned Vizio deal. You could have Miss Warren, Senator Warren, or any of the Democrats. Guys, this is absolutely insane. In a year where Microsoft was able to buy half of OpenAI, a company that wasn't even around to make a profit, was actually set up as a nonprofit organization. Microsoft can buy into that company for $10 billion. And actually, it turns out that it's not even a cash deal. They're just doing Azure credits. And then Microsoft can also buy one of the biggest video game makers in the world, Activision, for $69 billion. Microsoft can get those deals through, but heaven forbid Amazon wants to buy a stupid, like $1 billion iRobot vacuum maker. Oh, we can't do that. And Walmart wants to buy a TV maker. Guys, when's the last time you walked through Costco or Walmart? How many TV brands are there? Vizio is one of dozens that are inside of these electronic stores. And we have to look at this. Why are we electing? What are these people doing? Our roads outside are failing. Our schools are teaching God knows what to children. There's crime all over this country. And they're worried about a $2 billion acquisition of a TV maker, which is a commoditized market. We got to stop voting for these people. It's nothing against Elizabeth Warren. It's nothing against her being a Democrat. She could be a Republican. I would be saying the same thing. We need to get rid of these people and stop voting for them. Jeff Bezos and NVIDIA reportedly join others in backing a startup building humanoid robots. Now, tell you what, this is going to be a hot hot market in a couple of years. We'll see who is able to penetrate it and make a lot of money. Anybody who's kind of first to market here, because again, I think I've said this on previous videos, we can point to a dominant search engine. We can point to a dominant handset iPhone maker. We can point to a dominant electric vehicle maker. We can point to a dominant AI chip maker. We can point to the dominant e-commerce website. We can't point to a single company that is in the lead out in front in robotics. And the first company that gets there, it could be $1 trillion opportunity. Moving on to Netflix, start of the week at 578 and some change, up about 1%, finished the week at 583. Wasn't a ton of news out of Netflix, but we did have other fellow streamer and TV stock, Warner Brothers Discovery, which spun out from AT&T, which AT&T had its own problems this week. Warner Brothers stock now in like penny stock territory, hitting a new low after ad sales and people cutting the cord cut into profits. Warner Brothers Discovery now just an $8 stock. I tell you what, you just got so many problems in that area. Now, moving on to NVIDIA, start of the week at 703. And what else is new, guys? Shares of the AI chip maker up 12% in a week to finish the week at 788.17. And if you watched our video on Wednesday, this thing's got $120 to go before technically it's reached an area where, you know, profit taking is likely. Now, Microsoft is said to be working on a networking card to cut its NVIDIA reliance. A lot of these companies are going to say this and probably potentially do it, but it's going to take them a year or two. And even then, do you totally cut your reliance on NVIDIA? I mean, they are the experts in a lot of this field, and it doesn't seem like anything's going to slow that down. Bearing the lead a little bit, NVIDIA's earnings, I mean, we did a video on this. We showed you the print. We showed you the revenue year over year. I mean, this company has basically kind of remade it. I mean, it's a completely different company than it was a year ago. The guidance was absolutely fantastic. And now, and I talked about this on Wednesday, is the question is how much higher this revenue goes. Does it get to 30? If it gets to 30, NVIDIA stock is probably pretty much relatively fairly valued. If you can get to $40 billion or more on revenue, I mean, you can buy NVIDIA stock today and you're probably going to do pretty well. Now, the company did make history this week as it was the first chip maker, or chip designer is probably the best way to say it, to true $1 trillion in market cap. Now, this is important. We didn't talk about this enough on the video, but I read through the conference call actually twice in NVIDIA. A very important point that they say that they're inferencing part of their business. And inferencing is every time you interact with ChatGPT, like you say, what is the capital of California, and you press enter. When it spits out that result, that's an inferencing. It's almost like a Google search result, if you will. They estimate, I'm talking about NVIDIA, that's about 40% of their business. I think even another where in this conference call, Jensen Huang said that's actually pretty conservative. So you're still going to see a lot of training. So training on data, training on different types of models and coming up with new training models, ChatGPTs, if you will. That's going to continue. But what's interesting is the inference part of their business, the fact that they are seeing high usage rate from the chips, is twofold. Number one, it's obvious for NVIDIA, if people are training and doing inference on their chips, well, it just means the demand is off. I wouldn't say to infinity for NVIDIA, but you've got a long runway of demand if people are using this for both training and inference. What this is also saying, more importantly than that, this is a very important point, is if you are seeing not only Microsoft and Amazon and the cloud providers and IBM and Oracle, if they're buying these chips and they're buying them and they do a certain amount of training, and the ChatGPTs buy these chips and they're doing a certain amount of training, but what they are seeing is that they're not just buying these chips and seeing training. The training is continuing. What they're seeing is people are actually using these chips. This isn't just Microsoft and Amazon and Google blowing billions of dollars on computer chips for a pipe dream. No, people are actually using these for real life things. Obviously, ChatGPT is the stuff that we interact with. You got Midjourney and Adobe has products as well. People are actually using this. And I still think we're in the early days. It's almost like 1999 with the internet. It was like people were using the internet, but it really wasn't until the smartphone really came around where everybody was using the internet all the time. And so I still think, I think we've got a long ways to go here. Now, speaking of a long ways to go, Intel's Foundry push, the Foundry push is Intel's push into actually, they already manufacture the chip, but they're looking to become a bigger player where they don't just design the chips, they actually put them together, and they've got the lithography machines from ASML, and they're actually basically being like a Taiwan Semiconductor. Now, its push has potential, but competing with Taiwan Semi is going to take years. And that's the thing to underscore. I get comments in my section, especially when I do an Intel video and I tear the company apart a little bit. Oh, well, their foundry business is coming. Yeah, it's coming, but if you're an old man, you might not live to see the day where Intel actually makes some profits. And I think they've already gone 50-50 partners with a joint venture on one of their foundries. So they're not even going to keep most of their profits from some of these ventures. So just something to think about. We do wish Intel the best. I actually hope they succeed. Moving on to Google, start of the week at 140, up 2.6%. Finish the week, we'll call that 144. AI chatbots are going to cause a 25% drop in search engine volume, according to experts, by 2026. Here's a couple of things to understand about this. This is probably true, might even be somewhat conservative, but the vast majority of searches in Google actually are not monetized, and Google probably gives you a stat for this, but most keywords actually don't trigger an ad. And even if it does trigger an ad and you click on it, I can attest to this. I buy traffic off of Google's search engine. I'm never paying more than 6 or 7 cents a click. So even when you do see ads, we're not talking about, high intent, high value type of clicks. Now, what that changes is when you get into legal, travel, insurance, shopping, really high intent, high transactional volume type searches. Well, yeah, if those start going away from Google, or if Google's not able to come up with an AI product to help you buy a plane ticket better, or insurance, or find a personal injury attorney or a plumber. Well, yeah, Google's business is under threat, but I have to imagine that Google's going to come up with AI products, not just on the search side, but on the advertising side, that is actually going to make ads and the search engine better. And just from the demos that I've seen, particularly around shopping, where I think one of the demos that Google showed was like, show me a mountain bike, show me one that's red, show me one that's within 20 miles of my house. And they kind of walk through this kind of shopping experience using AI. And I was like, wow, that is really cool. That's a much better experience than the way you have it today on Google. So as long as they continue to invest and they roll this out, I actually think Google might even be better off in the age of AI. Now, the company did have to pause their AI-generated image creation tool on Gemini as people saw lapses in race accuracy. So I didn't really know what this was about. So I had to go find an example. So apparently people were saying, I want an illustration of a 1940s German soldier. Now, the first result looks potentially like that could be correct, but clearly the second, third, and fourth probably not accurate. So some people are accusing Google of maybe being a little too woke, like they're trying to use gender and diversity as a way to kind of rewrite or erase history. I don't necessarily know if that's the case. Certainly I can understand how people jump to that conclusion. The way these models work and the way these models are trained, and maybe some of the guardrails that Google has in place, might lead to this type of thing. I think just broadly as a society, we need to be careful about erasing history. I see the removal of statues. I see kind of a movement towards like racial equality and gender equality, and all of that is great. But we don't need to actually erase history, because if you start erasing history, then history starts to repeat itself. And so we actually need to look at the past, understand it, and understand how that is different than it is today. And I don't think these AI models spitting out soldiers that look Asian as a representation of a German soldier in the 40s really does society much good. Now, Google aims to start manufacturing Pixel phones in India by Q2. This is very interesting. Obviously, something that we've talked about a lot here on the program. I've been listening to a lot of Bloomberg radio and stuff like that. It's just something I have on the background, and they bring on a lot of interesting guests and stuff. The tricky part about India is they have some connections to Russia and China as well. And so we have to start to wonder if this shift into India could get murky or complicated geopolitically. Right now, it's not really that's not really the case, but we just have to wonder if down the road it could potentially get a little murky. I certainly hope it doesn't. Now, moving on to Microsoft, start of the week at 402, and boom, up 2% to finish the week at 410. Microsoft just continued to move higher. Now, Meta and Microsoft are lobbying the EU against Apple's App Store supremacy. You really think Meta and Microsoft, if they had App Store supremacy, would they really be complaining about it? No, but when it's not you start knocking on the door of regulators. And clearly Microsoft's great at this, because like I said earlier, they were able to get through two of the largest acquisitions this company has ever been able to put together. They were able to put it together and get it through regulation like clockwork. And companies like Walmart and Amazon can't even buy $2 billion consumer electronics, which are largely commoditized. Moving on to Tesla, start of the week at 195. Shares of the EV maker down about 2%, finish the week at 191.97. The EV revolution might be making new alliances out of rivals. So what I think might happen is, we talked about Netflix earlier, and we talked about Warner Brothers, how that stock's sinking to a new low. And if you look at kind of the streaming world, you saw that combination this last week of Fox, and I think it was CBS and Disney. They were combining to make kind of an over-the-top or a standalone sports product. I think the same thing's going to happen in the EV space. Streamers on the TV side have realized, man, it's hard to make money other than Netflix. I think the EV companies are going to find out the same thing. Other than Tesla, it's very hard to make money in this business, because Tesla had the benefit of building an EV company from scratch. And while that was super ambitious and very risky, when it works out, it gives you a huge competitive advantage against everybody else. And so the rest of these EV makers that are trying to come in from scratch, it gets tough. It also goes along with something that I often talk about on the show, or maybe not often enough, is in the stock market, there are gold medal winners, okay? There's typically one winner. Search engine, one winner. Smartphone, one winner. Enterprise software, one winner. E-commerce, one winner. Social media, one winner. It doesn't mean that the Snapchats and the Salesforces and the Pinterests and the Yahoos and the Samsungs and on and on and on can't be great investments every once in a while, but over the long term, the gold medal winner wins. And in the EV space, the gold medal winner is clearly, by far and away, Tesla. Everybody else is going to have to fight for silver and bronze, and actually combining, I think it has to happen. And so like a Rivian and a Lucid and some of these other kind of standalone EV brands, as we see Rivian kind of tip into a penny stock territory as well, as shares were down over 12% today as the company announced cutting staff, and really their sales, their vehicles are beautiful, and I see plenty of them on the road. They're just not selling enough of them. Moving over to the technical segment of the show. And remember, this is the technical segment. If you don't like it, there's an off button. I would appreciate, though, before you do that, hit that like button and subscribe if you haven't already. S&P 500's in a beautiful uptrend. We are anticipating at some point you meet some resistance and you have pullbacks in the S&P 500. should be bought. Same thing with Meta. I mean, this thing is looking at, I mean, this is beautiful when we're talking about the micro trend here. Really, since earnings, you're making higher lows. You just made a new higher high. Again, we're anticipating at some point this gap fills and you get a shot at Meta at like $400. But at 485 right now, sir, seems like a long ways away. Apple has gone sideways. Since May of last year, you've traded between 165 up to 200. Micro trend doesn't look good with Apple. You made a high here, lower high, lower set of highs. Looks like to me you're in the midst of another lower sets of high. So I think with Apple, at the very least, you retest down here at 178. I know you're only $4 away, so it's not that big of a call. A break of that level gets you excited from a shareholder perspective. First area where you're pretty darn excited about Apple is anywhere south of 175, anywhere south, really like 170. South of 170, retest this area. That's probably your first moment for that. Moving on to Amazon. Looks like we confirmed, not quite, but almost another higher high. It's not confirmed with higher lows. You do have a gap in the chart, but for the most part, Amazon's been in a very steep uptrend since January of 2023. So you're well on like a little over a year of an uptrend. And until you get, and again, an uptrend doesn't get broken until on Amazon until you get south of like 140. And so you're way over trend on this one. So you have to assume that trend will continue. Netflix is looking very much like Meta. You're making higher lows, higher highs. I mean, there's no stopping this stock. And some of it could be that the competition just sucks in this area. You look at Warner Brothers, you look at Paramount, you look at NBC, Disney, they just can't compete with Netflix. And Netflix is very similar to Tesla, right? They were able to kind of, and I know they started with DVD rental, but they kind of built a streaming model from the ground up. And these other cable providers that rely on that traditional cable money just haven't been able to adapt. Now, moving on to NVIDIA, I did point this out on our video, our earnings video. This one, and I actually noticed somebody on TV, I was watching, I think I was watching Bloomberg, and somebody actually had this exact same chart. And we've had this chart up for a couple of weeks now. So this is what people are looking at, okay? And look, when we look at these charts, I think people are thinking, I'm on here telling you about the chart. No, I'm telling you about the chart everybody is looking at. Okay, we're all looking at the same chart. Now, they can be interpreted in many different ways, but NVIDIA, it's very simple. You are in a mega trend since 2017. And quite frankly, it actually goes back further than that. But just from what we can fit on the screen, we're in this mega trend, and we don't test the upper bounds of this trend until you get to 960. That's your spot. If you're sitting on NVIDIA gains and you want to cash out, and I know some of you guys look at these stocks almost like your wife and your children, you never want to sell them. I for some reason don't look at stocks like that. I am very quick to sell and take profits and buy vacation homes and watches and jewelry for my wife and things for my kids. It's just what I do. I have some stocks that are set aside that I don't sell, but guys, when I can make money, money is there and I take it. This is your spot up here with NVIDIA. That's where some selling pressure should emerge if this, again, like 7-year chart pattern stays intact. And if you're looking to get back in or in to NVIDIA, that's your area. We should have pullbacks, I would assume maybe back to 700. And that's maybe your first opportunity. Moving on to Google. I do want to look at this one. This one's still looking good. Micro trend. We're making high, lower high, but it's not really that concerning because it's balanced off by a series of higher lows. So you're kind of wedging out with Google. Buyers and sellers trying to figure out what to do with this. But in the short term, in the long term, you are still in an uptrend and dips should be bought in Mr. Google. Moving on to Microsoft. I mean, how long have we been saying buy the dip on Microsoft? And look, some of you might have missed NVIDIA. Some of you might have missed Meta, but you should not have missed Microsoft. You should not have missed Google. You shouldn't have missed Amazon. You shouldn't have missed Apple. Like, I get it in my comments all the time. Oh, I missed out on Meta, or you told me to do this with NVIDIA. Well, guys, Here it is. You've had 100% rally in freaking Microsoft. You should have made some money somewhere, and Microsoft dips should be bought. Moving on to Tesla, we're just kind of working our way up here. Shorter term, we're trying to push to the top of the range. Push to the top of the range with Tesla should trigger a sell signal anytime you get above really 200 on this one. The sellers should come in. You're assuming the pattern stays intact. New lower low, anything around that 150 mark probably be where I'd be interested with Tesla. Hopefully guys enjoyed today's video. We'll be back again next week. Have a fun and safe weekend, and good luck with your investments.